puesto en ese camino la tensión esta mañana. Nos acompaña Massimiliano Bondurri, founder and CEO de SGMC Capital. Massimiliano, good morning.
Good morning to you.
What do you think about the situation in Poland and how is this affecting the global markets, the global stocks?
Well, as of now, there's still a lot of uncertainty. Of course, we're waiting for answers, and especially we're going to be waiting for an official assessment of the situation from the relevant parties. But as of now, it's very clear that the market is not particularly worried. They're waiting for developments, but again, you're not seeing panic in the market. You're not seeing stocks fall. Yen is not really depreciating. Gold is not doing that much. Therefore, the expectation is that this can hopefully be put aside as a mistake, as something which was not supposed to happen, and potentially it could then lead to additional sanctions on Russia. But hopefully it's not going to have military repercussions. But at least this is what the market is pricing in now. Of course, we need further developments. We need the official statements from the involved countries. But as of now, the market is relatively quiet and is hoping for the best for this situation.
Do you think something different in inflation expectation in United States and Europe now?
Absolutely. The recent data out of the US has shown that peak inflation is definitely behind us. And actually, inflation potentially could be coming down at a faster pace than initially expected. And that's actually what has been driving the recent rally in the US stock market, especially in the tech-heavy NASDAQ. Because, of course, you've seen expectations of inflation coming down being brought forward. And that, of course, has had positive consequences on the overall risk environment. And you had a positive rally. In Europe, the situation is a little bit different because, of course, first of all, the central bank in Europe is still much behind in terms of hikes that they have done with respect to the Fed. And inflation remains quite sticky over there in Europe. We've seen today's data out of UK, which was worse than expected. And that is likely to continue weighing on the market. The difference with European markets is that they've actually held up better over the last few weeks as compared to the US. So they did not participate as much in the recent rally like the US market did. But of course, they were holding on better. Therefore, overall, they've actually fared decently well this year. But European Central Bank, again, is still behind in terms of raising rates. The ECB will not get to the same final rate as the Fed. The Fed is, of course, much ahead and can count on much stronger growth within the US. But of course, inflation is still definitely a negative issue that all of Europe needs to continue facing with.
What do you think about this investor now that they have different problems about Poland, geopolitical problems, but this is time for pause or for pivot for central banks? And what could be the reaction for investors now?
Central banks are not going to pivot just yet. Especially the Fed. The market now thinks that it's going to be cutting rates already comes August, September of next year. That is not going to be happening. The Fed cannot risk once again being behind the curve and losing its image like it did last year when it did a big mistake with respect to this transitory inflation, which proved out not to be transitory at all. With respect to the market movements, clearly should a pivot come, it's going to be very positive consequences. But as just mentioned, that is unlikely to come anytime soon. With respect to opportunities in the market, there's still a lot of opportunities. If you look at the fixed income market, so for the corporate bond market, now if you look both in euros and in dollars, investment grade corporate bonds in the 4 to 5 years kind of maturity are giving you extremely interesting absolute and relative yields. You're looking close to 4.5% for euro denominated and about 5.5 to 6% for dollar denominated within that investment grade range. And that's something that definitely investors can look and should look to take advantage of while waiting to expose themselves a little bit further to the equity market, which after the recent rally again seems like a lot of the positives are already priced in.
Massimiliano Bondurri, founder and CEO at SGMC Capital. Good day, good business.
Thanks, you too.
9:42 de la mañana, mercados pensándoselo, mirando, entendiendo.